Crazy, right? Hey guys, Akil Stokes here, and welcome back to another Weekend Trading Edge video, your weekly look around the markets where I come in and share a few of the top trading ideas that are on my radar for the week ahead. We're recording this a little bit early this week. It is Friday afternoon, so you may see some candles moving, but I've got a busy weekend ahead. The kiddos have a soccer tournament. I've got family coming up, and because I plan on being that ravenous soccer dad, I don't really expect to have a voice by the end of the tournament. So better to do this for you now. Now, Friday was a very important day in the market, and we were hit with two big surprises. So why was Friday so important? Well, because it was Non-Farm Friday or Jobs Friday, which in my opinion is the most popular day in the markets. It's not the most important, right? Interest rate decisions are going to be more important than jobs numbers, but because of the consistent nature of it, this big brouhaha that happens every first Friday of the month, the market really gets excited over it, and a lot of traders lose money being reckless gamblers. But that wasn't the surprise, right? That's expected. The surprise was this. We came into Friday expecting a very negative jobs number. I talked about this in a previous video. The expectation was anywhere between 65 or 73. And just to give some reference, we need about 150 to 200 to be in a normal state. So the market already had kind of this negative expectation. To our surprise, we actually saw an extremely positive number. I believe we had a number release of 115, which was kind of hinted about by Trump the day before. Maybe that has something to do with it. But that was shocking for the market. Surprise two was that despite the shock, the market seemed not to really care about it, right? You would expect that with deviation from the expectation, we would see a massive movement in the market. That's what we always teach. We got our deviation from the expectation, yet we didn't really see anything lasting. And that tells you all you need to know about how much the market cares about jobs right now. It doesn't, at least in the bigger scheme. Right now, the bigger issue is going to be inflation, and inflation is fueled by this war that is going on, which was supposed to have a ceasefire, but I keep reading articles about shootings and bombings, and that just doesn't coincide with ceasefire, so I'm a little bit confused. Anyway, that's the fundamental bit. This is going to carry over into the technicals, but I know you guys like hearing that, so I want to give you a little bit of a recap on that as well. By the way, if you're new and you're wondering why all this stuff matters, markets move off of monetary policy, so interest rate decisions. Interest rate decisions are mainly moved by two things, inflation and jobs. Jobs number handles the jobs thing. War handles the inflation thing. So this is why these news events were important to the market. All right, now let's hop in. So we're going to kick things off on the euro dollar, and like most of the pairs out there on the higher time frames at least, we've seen a lot of consolidation. Now there have been opportunities, but just not as many as we would usually expect. It's also getting towards that summer period where the market starts to slow down anyway. So it's a very interesting time in the market, and you got to be very careful not to overtrade. But what we have here on the euro dollar 4 hour is price action retesting a previous high. You can see that. Well, we had a high right here that was created, a big rejection candle. We came there again. We pretty much increased that zone, and we're now testing it for a third/fourth time. Now, what gets interesting is this. If you look at the pattern of the market, here is what we've seen, right? We'll start over here. We saw a move down. We saw a little bit of consolidation, right? Followed by a lower low, lower close. This is going to be a very bearish sign right here. We then retraced all the way up, right, to our highs here, put in a higher low, put in a higher high, put in a double top, and then the most important part, right, broke and closed below this. We've been talking a lot about the 2618 trading strategy in the live room this week. This is a perfect example. Price action validates that double top with the break and close below, and then we come all the way back up to test it. And this is very close to what's called a kiss of death trade, which is essentially a 2618 that goes all the way to the extreme. Anyway, all that fancy jargon out the way, here's what you can look for, right? if price action, again, price is still moving because it's Friday evening, but if price action can give us a lower low, lower close, either on this green candle to end the week or maybe the opening candle right here, it's a decent trading opportunity to look for a move back down to these lows. Now, there's nothing that would make me expect that we're going to continue lower here or lower here. So this is going to be a nice little counter trend type of setup. And hopefully you can get an entry that's good enough to make the risk reward work. Now, how this lines up with the fundamental stuff that's going on is, remember I mentioned that there is a ceasefire and peace talks, right? So again, going back to kind of war market economics 101, news for war stopping has given us dollar weakness, right? Which would mean on this chart, dollar goes up. News for war continuing gives us dollar strength, which on this chart would mean dollar go down. So we've had this ceasefire talk, and we've seen the market, or we've seen the dollar, I should say, go up, go up, go up. But now we're shooting each other again. And if the market looks at this, and we got to get more information because we're still in a ceasefire yet firing. And I think people are trying to make sense of things, and the whole peace agreement needs to get signed soon. Or Trump said, I forgot his quote, but something worse than what he said before. I think we're going to knock him out even harder than last time. If there are hints of war continuing in a bigger, badder way, we're probably going to see continued dollar weakness or strength, again, which would be in the line of this trade. So just keep that on the radar when you're looking here at the euro dollar. This is both a technical and a fundamental play. And just briefly, we're going to look at the same thing on the pound dollar. I won't walk you through it again, but same situation here where price action came up. We created this double top action. We broke and closed below it, and now we're coming up to retest that level. Any technical sign of a reversal could be a good move to look to trade it back down to the bottom here. So that was a structure-based trade. We're going to bounce to a harmonic pattern type trade next. I'm going to go back and forth. That way everyone's getting something that they like. And harmonic patterns are Fibonacci-based patterns, and they tend to form when the market is in consolidation. So when the market is going sideways, bouncing back and forth. And if we look closely at this consolidative period, meaning everything that's happening within this zone, we are going to see an advanced pattern appear. You can see about 3 of them that were very close to appearing. None of them ended up getting triggered, but we do have one more on the radar. And for this one, our starting point is going to be right here. This is going to be what's called our X leg, if I can draw this correctly. There we go. And we're going to start off with a swing high to a swing low. Now, when we teach patterns, we teach about 2 different types of legs. We teach about anchor legs and impulse legs. Impulse legs are like extensions, legs that break previous structure. So a good example of an impulse leg would be something like this right here, where we break a previous level of structure. Those are going to be your clearer and more obvious legs in the market. But you can have patterns with anchor legs as well. And anchor legs are going to be more like retracement. So you can see this move right here. It doesn't violate any previous level of structure, but it's still a clear swing high to swing low, and that's okay. So we have that X to A leg, that clear swing high to swing low. I then want to take my Fibonacci retracement tool and drag it from the extremes of that leg. Let me get this X leg back on the chart here. And I want to see what Fibonacci level we come to. We touch the 618, but we do not violate it, which means the cipher or potential cipher is still in play. So that's going to end up being my B leg right here. There we go. I'm going to put a tool on and do all this later, so I don't even know I'm wasting time drawing this. But anyway, creature of old habit. The next thing I want to see is I want to see an extension down, which is going to be my C leg. That extension needs to come to my 127 Fibonacci extension, taken from the high of my X to the low of my A. So the same swing that we took our retracement from. Boom, you can see it hits the Fibonacci extension right there, 127, giving us a valid C leg. And then the last thing I'm looking for is price to roll all the way back up to my 786 Fibonacci retracement, taken from the extremes of the pattern. All in all, it ends up giving us something that looks like this: X to A to B, B to C, and a CD completion right here at the 786 or right here in this zone for a potential selling opportunity. Heading over to, what is this, Canada Swiss next. we actually have two opportunities in front of us. We have a potential bigger pattern opportunity after just coming off of a pattern. And we have a structured trade opportunity as well. Just real quick, just to give you an idea, again, you see how the market has been in consolidation here. We've had about 3 patterns that I can at least eyeball right now, right? If we just take a look at this, one was going to be a butterfly from back here. I'll draw this on for you. It's going to be an X to A to B, B to C, C to D right here. We rolled over really nicely. It looks like we have a bat pattern right here. This is my first time checking all this out. Nope, Gartley pattern, a shallow Gartley here. So that's going to give us an X to A to B, B to C, and a CD completion right here that rolled over pretty nice. Now we're looking for another potential Gartley pattern and a structured trade. We're going to do the Gartley first since we're in pattern mode, then we'll take a look at the structured trade second. I apologize, keep itching my face. It's not the drugs, I promise. I know it's Friday and I'm a trader and, you know, all that stuff. No, went for a run, was playing with my neighbor's dog when they came in, and now I'm getting all congested and stuff like that. Not the drugs, I promise. But this time. So let's look at this potential pattern here. So same thing. We have a starting point down here, swing low to swing high. This is going to be our X to A. We then have a retracement right here, which is going to be my A to B. I want to bring on my Fibonacci retracement to measure my retracement. See how that works? And based on where that retracement comes to, it tells me what pattern to be on alert for. This specific opportunity comes to the 618, so it means I'm on alert for a Gartley pattern. And for the decompletion of my Gartley pattern, I'm going to take my Fibonacci extension tool from the swing high of my A to the swing low of that B, and I'm going to project a move to the 127 as being my completion point. Now, there are different ways to do this as well. I'll draw a few of them on. I personally like the 127. It keeps things nice and simple and consistent for me, especially when it comes to risk reward, or consistent enough when it comes to risk reward. But there are other methods as well, and I used to trade many of these methods too. One would be a decompletion at the 786, so something like that. You can see it's a lot shallower, which is going to get you involved in the pattern more quicker, whatever I'm supposed to say here. But it also gives you a lot more risk. We can look at the risk reward a little bit later. Another one is going to be an AB equals CD pattern. So taking the length of that A to B move, copy and pasting it, dragging it onto your C leg, and you can see in this case it's going to give you an entry right at the 786. Now real quick, let's just take a look at the risk reward here and compare the two. We're going to use a 113 stop loss. It's just an easy way to put a stop loss on here instead of doing any calculations. So let's say our stop loss for both patterns is going to be right there, right? That is going to be our stop. In order to project targets for our pattern, I'm taking a Fibonacci retracement from my A leg to my D completion. And I'm going to look for, let's say, the 3D2 with that first target. So let's bring in our risk reward tool. And why can I, oh, there we go, volume's in the way. And if I enter here at the 786 and I go to first target there, that's going to give me a risk profile that looks like this, right? A little bit less than 1-to-1, not too great. If I use the decompletion, and it's important that I drag my Fibonacci down here as well since price has moved, that's going to give me a risk reward, right? My stop loss doesn't change. That looks like this. So I'm not saying one is better than the other, but as I mentioned, one of the reasons that I decided to go with the 127 method, which is the method that my mentors taught me, was because I get a much better consistent risk reward. But I did try these other methods at one point in my trading. It just didn't work out for me and what I wanted. All right, let's erase everything and now talk about that structured trade. So you can see before we complete that pattern, we need to get past our B leg. And with this B leg being a major pivot in the market, right? The market going from a low to a high, this is also going to be looked at as a previous level of structure. And you can see price action diving with a lot of momentum, big red candles right into that level. This is going to offer a potential trading opportunity for a structure-based trader as well. So you can see price diving down into this level. We can go down to a lower time frame to the 4-hour if you want. We can see a little bit of loss of momentum as we're starting to see the candles get smaller and the closes get higher. this would be a decent sign, or a decent level, I should say, to look for that reversal. So look for an area where the market runs out of steam and perhaps give us a little bit of a retracement right back up here. So we're not looking for any major move. I'm not looking for a market to go back up to, 58 cent or anything like that. Just a quick move back up to our 57 even handle. And that could be a decent trading opportunity. Now, I know what you're saying. Well, Akil, right, if this goes up, what about the Gartley? Well, both can be true, right? If I just pop right back out to the daily, let's say we get this move right here. Is it inconceivable that price action can do, or rather this, would it invalidate the pattern if price came up here and then went down there to complete it? No, not at all, right? So you can certainly have, or at least look for both opportunities, and they don't contradict each other at all. Now, real quick, before we get into our next pair, I want to take a few seconds. I promise it'll be quick to do a shameless plug. A lot of you guys have questions about trading computers. I've got a free trading computer guide for you. Download it. It's created by a guy that was an actual trader, old school trader in the pits. He built both of my computers and he answers a lot of my questions. I said, hey, I work with a lot of traders who also have a lot of questions. So he said, Akil, take this, give it to them. It's all the information you need. So scan the code or click the link in the description box below. Get your free trading computer builders or buyer's guide. Know what you need to know about computers. That way you can make the best decision, and you're welcome. Now, back on the charts for another pattern formation. It's going to be a long-term one, which I want to give you guys long-term opportunities too. This is going to be gold. And gold is putting in a potential either shallow Gartley or bat pattern, right? Let's take our swing high to swing low. Let's measure out that Fibonacci. You can see we just missed the 618. So in the previous opportunities, we hit the 618, which put us on alert for Gartley pattern. In this one, we just miss it, which puts us on alert for a bat pattern. And that bat pattern is going to look something like this. Let me just use the one with the writings on it. Swing high to swing low, X to A. First retracement, A to B. Failed extension, B to C. And if we progress up to this 886, that is going to give us a decompletion. Now, we spoke about risk reward in the last setup. Bats are my favorite of the advanced pattern formations, not because they have the highest hit rate or anything like that, but because they give me the best consistent risk reward. So if we just take a look at this right here, because that decompletion is always at the 886, always, it gives me a nice high entry. It keeps my stops nice and short, although in this case, I would want to get them above this level, right, if you're smart. And you can see it gives me a nice consistent risk reward. Yay! Now, bouncing back to a structured trade here, we're going to be on the FTSE, right? And you can see that, again, price has been in a little bit of consolidation. We put in a nice little double top action up here. And then we came down and we kind of just went a little bit up, a little bit down. Thought we were going up, then engulfed that and came all the way down. And now we're just hanging out at this level, consolidating, right? If we go down to the 4 hour, this gives us an interesting little story. Let's measure that out again and look at the story that price told us. Price dove down from these highs and created some lows. We then pushed back up, gave us a little nice double top action here, and then retested these lows. Now, here's what matters the most. Price, kind of like the euro dollar situation, broke and closed above these highs, giving us a sign of buying pressure. And despite us diving all the way back down, because weird things is happening in the world, we still have that violation, which creates a new bias. And because we're consolidating at the lows here, this is not a bad opportunity for a long. Now, why it's such a great opportunity for a long is because, this is a good opportunity for a long because you know exactly where you're wrong. I should make that into a song. Whatever. We have our structure shelf right here. This is the level that is being held and protected. It's a little bit lower than that, actually. So we know that if price violates this level, Akil is wrong. I promise I won't do anything this time, but we are wrong. So that means that we don't really have to have a big stop loss to take advantage of this. Now, on the other hand, if we are right, where do I expect price to go to? Well, all the way back across the range here. So you have something that looks like this. If you were to enter on a higher high, higher close, which would be this green candle right here, you would have a risk, again, somewhere below this level. and a reward all the way back up here at the highs, which is a pretty good risk reward. If for some reason we were to come back down and get like a double bottom, that would give you an even better risk reward. Obviously, we don't know where that double bottom would complete at, but let's just say right here in the middle. Again, the stop loss level is the same, and that target is going to be the same as well. The only thing that changes is the entry, giving us a much better risk reward. And if you're someone that wants more safety, you can look for a 26.18. So price action to violate these highs, pull back into that level, and then look to trade it up. Boom! Not a bad trade if you're looking to get paid. I'm really going to stop this time. That was the last one, I promise. Now, speaking of promises, I did promise a trader on our tier 1 trading platform that I would look at this, and he may or may not have threatened to kill me if I didn't. So we're going to take a look at this. This is going to be the Dow Jones. And what we are looking for is a potential advanced pattern formation. Again, our starting point is going to be right here. This is a good example of that anchor leg, so it doesn't break structure like this one right here. But I think 100 out of 100 traders would agree this is a pretty clear move. There'll be one trader that says, well, Akil, there's a little red candle in here, so it's not an impulsive move. Shut up. Shut up. Don't be that one. This is a pretty stinking clear move, right? So we have that swing low to swing high, X to A. Again, bring the fibs out. We're going to see a 50% retracement. That's going to put us on alert. Do you remember? Do you remember? Do you remember? For a bat pattern looking like this. Oh my gosh, there's a big spider climbing down. I don't know if you guys can see this. Hold on. Look at this. Look at this. Can you see it? I don't know if you can see it. Can you? Can you? It's going up. It's going up. Look at that. Everyone wants to be involved in the trading edge. You gotta wait, buddy. This thing doesn't come out until the weekend. Yeah, get back up there. Crazy, right? Maybe that's a sign that I should invest in the spider. It's not technically a rhyme, so I didn't break my promise. Anyway, back to the Dow. Now I'm paranoid this thing's gonna land on my bald head. We have a bat pattern happening here. This is, I've been doing this video for all these years. That is a first. X to A to B, B to C, and then C to D right down there at our 886. And just to wrap a bow on all the fundamental jazz we spoke about earlier, remember, if we do have this renewed war tensions or war shooting each other, the war is going to go on. We may see a negative impact on the financial markets, on the stock market specifically, which means this thing would dive down. And if we dive down, well, this is the next level of structure that I would expect us to dive down to. So yeah, it works. Now, speaking of works, if you've been working on your trading for a while and you're not seeing the progress that you think you deserve, you're probably doing something wrong, and you shouldn't just keep doing the same things wrong, rather do something right. So here's what I recommend. Head over to our platform, www.tier1trading.com. Start with the trial membership. That way you can dip your toe in the tier 1 trading water, see if we're the right fit for you as far as our community, as far as our teaching, as far as our personalities. And if we are, we'd love to work with you and help you complete your goals. And if we aren't, at least you gave it a try. Now you can check it off the list and said, hey, this place is not for me. Anyway, there's no risk, there's no investment. You just get on, get some stuff, and then you get kicked out when your 14 days are up. So if you're interested, www.tier1trading.com is the place to go. Like, subscribe, lots of videos coming to this channel over the summer. And until next time, plan your trade, trade your plan. Where'd you go? Take care.
Best in the game, invest in my name. Check no restraints, I'm obsessed with the pain. I ingest, I retain, assess and I change. Possessed by the thought I'll be free one day from society's restraints. Money, clout and fame, mud, disease, a plague. We all love to hate, have to play the game, have to make a name. All our insecurities are on display.